Microsoft, the world's largest software company, is trading at about a 25% discount to its all-time high after reporting Q1 numbers, and is currently trading at a market cap of $1.8 trillion, a PE of 25, and a dividend yield of 1%. And with such a strong business model, fundamentals, and growth prospects, investors have to start wondering whether or not this is the prime time to buy now that shares have finally had a pullback, or if we should be sitting on our hands and waiting for a deeper retracement. Well, we'll answer all those questions on today's episode as we'll talk about Microsoft's Q1 numbers. How's it going? Welcome to Everything Investing. I hope you're having a great day. Today, we are going to start with a breakdown of the financials, the top line, bottom line, cash flows. We'll then jump into our intrinsic value calculator, which will identify whether or not this stock is a value investment or not. And if you enjoy earnings breakdowns and analysis, please subscribe because we post this content weekly. And if you enjoy the video, leave a like. With all that being said, let's jump into the video. Okay, so first quarter fiscal year 2023 results. We'll start with the CEO's comments. And they start off by pointing out that in a world of increasing headwinds, digital technology is the ultimate tailwind. They're focused on their customer experience while investing in secular growth areas to manage their cost structure. They continue to see healthy demand across their commercial businesses and continue to deliver value to their customers. Okay, it's one thing for a business to say how well they've done, but then it's another to actually show it and prove it time and time again. And this is a business that you will absolutely love, because if you look at the revenues, absolute growth, and actually the growth has seemingly been increasing year over year. That also translates right down to the bottom line as well, where we've seen some significant growth there as well. And actually, if we look at this from a total return perspective and we compare it to the S&P and NASDAQ indices, we can see Microsoft has also outperformed them in terms of growth as well, ultimately leading to higher shareholder returns. So with all that, let's jump into this quarter's income statement. Okay, we start with product revenue here, $15 billion. Plus our service revenue, and we're left with $50.1 billion for this quarter. And as we mentioned, we've seen growth year over year. Now, cost of revenue, only $4 billion here for products and only $11 billion for their services. So they're left with total gross margin of $34.6 billion. Okay, so this is a high margin business. And these are exactly the type of businesses that we look for to invest in because they have pricing power. And that's also not to mention the various moats that they also have with their various products and services that they offer. But anyways, after we deduct for our other expenses here, we're left with $21 billion in operating income, deduct for some further taxes, expenses, and such, and we're left with $17.5 billion net income. Keep that in mind as we use that for our estimation at the end of the video. Overall, if we look at this from a Q1 financial summary, we can see again, we start with revenue of $50.1 billion. That's an 11% increase year over year. And if we look at this from a constant currency perspective, we can actually get some more insight on how this business has grown, with 15% growth in productivity and business processes, 26% growth in intelligent cloud. That's huge. And then 3% growth in more personal computing, which again really goes to show how well this business is run. Then finally, we have 69% gross margin, which is huge. And especially for such a big business like Microsoft, it's not often that you see businesses being able to operate in this function with such high margins. And then when we look at our operating income, that's 43% margin, again, super high. And they're able to do this because they are a software technology company. So it doesn't cost them as much to produce these revenues. But this is one of the easiest telltale signs that this is a great business and that it's run very well. Now let's jump into the balance sheet here. They have $107 billion in cash. That comes from $22 billion from cash and then short-term investments of $84 billion. And when we compare that to their debt figures, yeah, $3 billion in short-term and then $45 billion. Add those up, you get about $48.5 billion in total debt on the $107 billion in cash. This is a beautiful balance sheet. This is exactly how a balance sheet should look from a safe and stable business. And finally, we get down to our cash flow reconciliation. We can see here net cash from operating activities, $23 billion just for this quarter alone. CapEx of $6.2 billion, so they're left with let's call it $17 billion in free cash flow just in one quarter. If you've been following my channel, you know there's tons of businesses who don't even do that in a year. Now, what do they do with their free cash flow? Well, they're paying down some debt. They're also buying a lot of shares, which is also the reason why in our calculation in just a second, we will not be using our per share figures. We will be using our net income / free cash flow numbers. But anyways, besides the share repurchases, they're also paying out their dividend and looking to reward shareholders through that. And ultimately, when we look at their total shareholder return in terms of their long-term performance, we can see over a 3-year span, shareholders have been looking at about 185% return. So again, if that's something that interests you as an investor, which it probably does, it's something you can expect from this business as they've been able to do this on a consistent basis year over year over year. But we already knew Microsoft was an amazing business. But what matters really here is if you're able to buy this business at a great price, because buying a great business at a bad price is not a great investment. And that is exactly what our calculator here is for. So if we estimate that they can continue to grow their free cash flow numbers and their net income numbers, which are actually about about the same at $17 billion per quarter, and we extrapolate this out across the year, we can estimate that they'll come in with about $70 billion in net income or free cash flow by the end of the year. And if we require a 10% return, they do pay a dividend, and that they're able to consistently grow at about 10% for the next 5 years. That drops down to about 6% for the 5 to 10 years after that on a 25 PE like they're currently trading at. This business would be worth $2.1 trillion. Again, they're currently trading at about $1.8 trillion. Now, if we're looking at this optimistically, let's say that they can actually continue to grow at their 5-year EPS growth numbers down here at about 20. Let's just call it 20% because 24% is a lot. This drops down to, let's say, 15% for the 5 to 10 years after on a 26 PE. Yeah, the stock will be worth about $4.5 trillion. Again, this is huge and a substantial upside from where we currently are trading at $1.8 trillion. Now, in the very worst case scenario, let's say some of their growth prospects don't work out the way they want it to. They see further headwinds in their revenue segments with gaming and software services, etc. They're only able to grow at about 5% for the next 5 years. Then that drops down to about 1% for the 5 to 10 years after that on a 15 PE. The stock would be worth $1 trillion. So given these numbers here, ultimately this investment thesis here for Microsoft is whether you believe this business is going to continue to thrive in the future or if they're going to start to slow down, right? Because if you believe that they're going to thrive and that once all these economic challenges have surpassed and we're past this, because we will pass this eventually, people will start to spend more again. Hopefully there won't be as many currency impairments, etc. And businesses like Microsoft are definitely going to benefit from that. It's just really a matter of how much they can grow. If they can start to grow again at the rates that they've been growing at historically, yeah, I mean, this might actually be an amazing buying point. And we can see if we look at this from a long-term horizon here, this stock doesn't really slow down. This is the first major pullback we've ever had with this stock since we took off way back in, like 2010, which really goes to show the fortitude behind this business and how well put together this business is. I can tell you, I love this business. I just don't know about the price that I'm buying it at. I'm going to monitor this over the coming quarters and make an investing decision accordingly. But that is my analysis for today's video. If you've enjoyed it this far, please leave a like, subscribe, and I'll catch you on the next one.